Let's dive into AMD stock. We'll also delve into volatility smiles, historical implied volatilities. I'll also show you the probability of where the price might move. What are the options markets implying? What kind of movement? I'll definitely talk about interesting strategies you can employ. Let's start from the very beginning of AMD stock. Over the last month, the stock dropped by 28%, but before that, it also rose by 35%. As we can see, there's been some consolidation between $160 and $180. It broke out from this consolidation to the upside, but now we're retracing back to the lower end around $160. Let's take a look at volatility. It definitely suggests that there could be some movement with volatility currently at 50%. That's high volatility. Let's also examine the volatility smile. It seems that towards the call option side, the volatility isn't increasing, but towards the put option side, volatility does increase. This indicates that investors are hedging their positions by buying put options. There's nothing unusual about this. Let's also look at historical and implied volatility. At the moment, historical volatility equals implied volatility, approximately at the same level. That's good, but from a trader's perspective, it's not ideal because we won't be able to make money from volatility movements. Typically, traders try to predict price movements, whether the stock will go up or down, but I always emphasize working with volatility. My friends, let's work with volatility. I'll show you how it's done. For example, let's assume that volatility might drop by 20%, and let's see what strategies are suggested to us. Actually, you don't need to come up with anything yourself here. All the strategies are already generated for us by artificial intelligence. As we can see, for some strategies, the probability of profit is 100%, but in reality, based on our assumptions, the effectiveness profile is much lower. So various options are presented to us, and we can compare these strategies based on these options. One interesting proposition caught my eye. Imagine being offered to sell one $160 put option expiring in May and buy one $165 put option expiring in July. Such a position would result in profit at the $160 level. But overall, there are many graphs to analyze, so explaining it all would take a while. I'm showing all this to illustrate how one can profit from volatility movements. It's not necessary to focus on the stock itself because predicting stock movements is impossible, as I always say. But predicting volatility movements is possible because it always reverts to its historical mean, as is happening at the moment. All right, let's look at the trading volume in options. There's a very high volume at strike levels of $165 and $170 for call options. Now, let's consider put options at $160 and $155. I want to point out these levels on the chart immediately. As we can see, for the past week, the stock has been trading within this range. We tried to break above $170 but failed. Similarly, we couldn't go below $165 mainly due to this massive wall of options. Above $170, there's considerable resistance due to the huge volume of open call options. And likewise, below $165, put options are preventing us from falling further. But I want to draw your attention to the very high volume of expiring options next week. Weekly expiring options aren't great for stock stability because as the expiration approaches, the stock tends to become more volatile. I assume that these options will be extended further and further each week, but this could have negative consequences. I've always talked about delta neutral hedging, meaning when a market maker sells you options, for example, a call option, they must hedge their risks by buying stocks. The more call options are bought, the more the market maker is obliged to buy. The stock for hedging, as we can see, starts to rise significantly. It continues to rise until a very large volume is sold. And as we can see, this happened on March 8th. A very large volume was sold, causing a significant downward movement in the stock. After this, we began to fall because the delta has now shifted towards a downturn, and the more money is lost in these options, the more the market maker will have to sell. At some point, panic selling may begin. Yes, everyone can say that AMD is a very promising company with excellent chips, artificial intelligence, and so on. Friends, I'm not arguing with you. It's a very promising company. Yes, it has chips. Yes, it has artificial intelligence. Everything is good. But here, pure technicality comes into play. Market makers will start dumping, selling stocks, and no chips or artificial intelligence will help you then. Let's also look at probability. This probability is calculated based on the options market. My friends, this is not analysts, this is not banks, this is not forecasters. All these people don't know where the movement will go. This is a market, how it assesses what will happen with stocks. Let's choose, for example, a month. Where will the stocks go in a month's time? As we can see, the highest probability is for the stock to be in the range of $155 to $160, meaning the market implies we will fall in the nearest month to the range of $155 to $160. Again, my friends, look at this market. I'm not predicting this to you. It's showing you the options market, meaning the price will fall in the near future. This probability is 8%. We also have a probability of almost 8% for the $150, $155 range, and it's all the same. As we can see, the probability of a downturn is higher than that of an upturn. And here's the most important thing that I always explain to you. I don't know how the stock will move. I don't know where the stocks will go, and I can assure you nobody knows this. I work with mathematical expectation, meaning if you simply believe, for example, that the stock will be worth $220, it's just belief. I'm showing you mathematics. If you want to make money, you need to forget about belief. You need to calculate and manage your portfolio wisely. If the options market suggests that the stock will be priced at $100, you might be surprised and say, no, that can't be. And all that, but my friends, here you need to set aside emotions. If the market implies that the price will be $100, then you should play accordingly, meaning you should devise strategies based solely on this knowledge. This is what I've always tried to tell you. There's no need to predict price movements. I never draw any technical indicators here. I deliberately don't show Bollinger Bands, moving averages, but maybe they do work, but I don't look at them. The most important thing is proper position and portfolio management, as well as mathematical expectation and probability. And as we can see, the probability of a downward price movement is much higher than the probability of an increase in price. And I'm not the one saying this, it's the options market. If you want to argue with this, feel free, but I would never advise you to argue with the market. Why argue with the market when you can move along with it? I've never understood that personally. I always move along with the market. Once again, if you learn to manage positions and portfolios competently, it doesn't matter where the stock goes. Also, I remind you that when I get monetization on YouTube, I will launch a new experiment. We will open a new portfolio completely from scratch. I will replenish it with income from YouTube, which will be small but consistent. Anyone can repeat the same thing. I will build the portfolio from scratch there. Everything will be as transparent as possible. I will show which stocks I buy, what I sell. I will definitely create a table. Everything will be completely free. I'm already looking forward to this experiment, already picking stocks, composing a portfolio, thinking about how to organize it all properly. Be sure to subscribe so you don't miss the start of this portfolio creation experiment. Let's talk about AMD now. It's reporting soon. We'll be watching that. But again, from my point of view, the price is very overbought right now. Its market capitalization is $263 billion, while it earns less than $1 billion. For me, this situation is definitely not normal. I would like it to drop at least $50 so it could be bought very cheaply. Again, someone will say that's a very steep drop, but the lower you buy, the more you can earn. I always go by that because I'm a long-term investor in that sense. I also advise you to watch my previous video about AMD stock. I also talked about the strategy there, how you can open positions, how to make money on this stock. Good luck to everyone.